Hey, good morning, everybody. Welcome to the last week of October. Friday will be the November 1st, so hard to believe that we're winding down 2 months left of this year and we'll be in 2020. Hey, just want to remind you that this market's hitting all-time highs. I want to make sure you've got your portfolio allocated properly and that you don't have too much risk, even though this market looks great. Um, we never know when it's going to turn, and so having the right amount of risk in your portfolio to make sure that it matches with your risk tolerance is very important. That's why we offer a free, no obligation financial x-ray of your current portfolio. To get yours, just call us at 382-0037. Dave's going to be here in just a few moments, and we look forward to sharing with you what's going on in earnings season, and we'll be right back.
Trim, that's the band Perry there. Good morning. It's 8:40 here, 20 before 9. Time to check in and find out what's going on with your money in the world markets and the New York Stock Exchange and all the rest of the places people throw big money around. Time to check in, and we'll go downtown and find out the specifics from Statler Financial Services. Phillip Statler's on the line. Phillip, good morning. I trust you had a good weekend.
I did, Dave. I hope you did too. It's amazing to me that here we sit on October 28th. This is the last week of October. Man, we're 2 months away from the end of the year.
I can't believe we're a third of the way through the fourth quarter already. I mean, I'm still feeling like it's halfway through summer, and it's not just the weather that's doing that to me.
The weather's definitely doing that, though.
That certainly reinforces the illusion at the very least. Well, let's see here. Back up to Friday. We had one of those banner days as all these columnists out trying to call us as heading into a recession. And you and I have been talking about data points indicating a slowdown, but green ink across the board, and the Standard & Poor's 500 hit in the middle of the day, not the end of the day, but the middle of the day, a new all-time high. Nosebleed territory is kind of a nice place to be, but I sure hope it doesn't mean that we're looking at a quick fall sometime.
Well, that's one of those things we never know, but they seem to think. I saw a headline said, no recession in sight. How much further could this thing go? And that's the, $1,000,000 question is how much further can it go?
Absolutely. And the political world gets into this somewhere as well. I mean, there's absolutely no way on God's green earth that everybody in power in Washington, on the executive side of the fence anyway, is going to do anything that's going to risk a recession. And we're going to manipulate the news out of China and our trade negotiations and everything in order to keep things as buoyant as humanly possible. But then again, the data points are still showing growth. They just aren't showing as fast a growth as we expected.
Well, that's true. And I think, as long as they can keep the information continue to come about China and the progression they're making there. I did see a headline that, hey, don't expect any more than stage one negotiations with China before the end of the year. But I still believe that the China deal has to get done for President Trump to get reelected. And that's one of those things that if he thinks he's going to get reelected, he's going to have to get this put together.
He's got to do it on the economy, no doubt whatsoever, because personal popularity and whatnot is always an iffy proposition in any politician, and President Trump isn't known for that, so the economy's got to drive it. Speaking of which, talking about trade and whatnot, exports and import numbers for this country came out, and it was a surprise to both of us. Our trade deficit narrowed by 3.6% during September, but it did it by both our imports and our exports falling, and I'm not considering that combination necessarily good news.
No, I don't either, but I think it's a great thing to see our trade deficit go down, which is one of the reasons that we started this whole negotiation deal with China in the first place, was because our trade deficit had gotten just way out of hand. And so don't get me wrong, it's still out of hand, but to see it drop by over 3% is a good thing. And we all knew that there's going to be some pain points in the process of making that happen. And I think that's what we're seeing in those numbers.
I suspect you're probably right. Seeing both numbers go down is not a positive sign, but if it's a data point that we can look at and see what happens next month, might be, that could change the opinion a bit. You had some inventory numbers that one of them struck us as being normal, and the other one struck us as, at the very least, a point of concern. Wholesale inventories fell unexpectedly last month, I gather.
They did. They were down 0.3%. over last month. So I'm thinking that that may be an import issue, in terms of getting stuff from China, the tariffs and that type of stuff. On the flip side, though, we had retail inventories up 0.3%. And you and I discussed before we went on there that that's probably makes sense getting ready for Christmas and the holidays and all that type of stuff. You would expect their inventory to be up.
And prognostications are up for at least some growth during the Christmas season ahead, so the retailers stocking up would be par normal and probably good news. The overriding thing going on this week, and it sounds to at least a couple of our tip sheets like we're starting to get into the what's the Fed going to do number. We've got a Federal Reserve Board meeting this week. Last week, you and I were saying it's been so quiet, it's a fair bet to say they're going to do nothing, but now all of a sudden the twittering is going on. We might have another interest rate cut this week. Have you seen any odds on that one way or the other?
I have not, Dave, and it kind of set me back a little bit, given that the stock market continues to hit all-time highs. I'm just not sure that that makes much sense for the Fed to do that right now. I mean, I think if the market started to falter a little bit, then that would make some sense. I don't know how much front running they can really do and not really, cause some issues.
Well, you and I have both expressed a concern that if we cut interest rates too fast and too reactively, we aren't going to have any tools left in the toolbox when the time comes we might actually need them. But as you say, we're bumping our noses on record highs in the stock market. If you take that as being a leading economic indicator, there really isn't a need for extra stimulus, at the very least for the moment anyway.
Well, that's true, because one of the things that we talk about when looking at the stock market is it is a precursor, right? It's looking down the road, 6 months or so down the road, what it thinks is going to be happening. And so, right now it seems like everybody thinks that things are going to be rosy.
Yeah, for the moment, we're hunky-dory. We are in earnings season now, and as usual, it's a relatively quiet day on Monday morning as we start gearing up for a pile of releases. I know you have a few quarterly reports out. The thing that's really causing the gossip to go crazy on the stock market is Tiffany, the big jewelry store, got an unsolicited buyout offer, and their stock is just absolutely going crazy this morning.
Yeah, it really is, Dave. They've been approached by the French luxury goods maker, LVMH. And so, they're talking about a possible acquisition at $120 a share, which would be a substantial increase, about 22% higher than what their closing price was on Friday. And so, obviously, they're getting some love today. They're up 32%. Actually, they're trading at $130 a share right now, and I'm trying to think, okay, if the offer looks like it's going to be somewhere in the $120 range, I guess they think maybe that may just be a starting point.
Somebody's overshooting the mark by a little bit. In the pre-market, we're already $10 over the tender offer. This is going to be an interesting stock to watch for the next 24 hours.
Well, yeah, and it's year over year, it's down about 8% based on Friday's close. It's bounced back some this year, but if you look back a year ago, it was 8% higher.
All right, so it's got some room to grow, just not necessarily 32% all in one day.
Right, exactly.
You had some other household names that actually did report some results, and you've got some interesting numbers as well, right?
I do. I've got one of the, Walgreens that sits on every corner. They came in and beat estimates by 2 cents a share. Their revenue also came in ahead of forecast. They've raised their cost savings target to more than $1.8 billion this year based on what they're trying to do in saving money. And so they're trading up this morning a little over 1%, which is a good thing because they're pretty far off their 52-week high right now. And then follow up that with a popular name, AT&T. They reported a penny a share above estimates. Revenue, though, was slightly below what they kind of expected. And they did announce kind of a 3-year outlook of what they think was going to happen. And I think probably the biggest thing I take away from that is there's been an activist investor that's been really harping on the management of AT&T. And it seems like they maybe have come to some kind of little agreement here on their outlooks and that type of thing going forward. Which is a good thing for them. They're trading up about 2.3% this morning, kind of close, getting closer to their 52-week high.
All right. I had a little bit on Cooper Tire. I don't know whether you had the specifics. I didn't have a chance to ask, but you see their display all the time at the 12 hours of Sebring, big manufacturer of tires. They had kind of a continuation of the picture we saw from last week's numbers. Sales didn't make the street necessarily, but they made more money off of it on an earnings per share basis, so I gather the investors are happy with them as well.
Well, they are. They did beat on earnings per share. They were expected to come in at 47 cents. It came in at 58 cents. I think that was probably a good thing. Um, Sales were expected to come in at 737 million. They came in at 704 million, so they kind of missed on the expected sales side. But they're trading up about 5% right now.
That ain't bad news to start the day out. Setting the table for the morning, Friday was solid green. Dow was up 152.5 points. NASDAQ up by a little over 57. And as mentioned, the Standard & Poor's with a 12-point gain at the end of the day. That's off from a peak in the middle of the day where they actually set a new intraday record for the Standard & Poor's 500. So everything's coming up roses so far this morning. Let's see if it'll continue. 45 minutes before we open, what are we doing today?
So, Dave, it looks like we are going to follow through based on Friday's close. The Dow's up about almost a half a point now. The S&P 500 is up a third, and NASDAQ up about a 0.5% also. So everything is coming up really green ink when it comes to those indexes. Now, we've got gold and silver kind of split today. Gold's down about 0.25% right now at $1,501 an ounce. And we've got silver up about 0.1%, $17.94 an ounce. Crude oil is trading down just a tad at $56.61 a barrel.
And I was following the bond rates, by the way. The 10-year Treasury bill is up by about 7 basis points this morning, indicating at least there's some affection for equities early in the trading week so far, right?
Yeah, it definitely looks that way. And tomorrow, just kind of a teaser. After the market today, we've got Alphabet coming out, which is Google, right?
Ooh.
So we've got them reporting after the market closes tomorrow. I'm sure that'll be a big topic tomorrow.
I expect so. Overseas markets, Asia mixed, or Asia was up generally at the close. Europe is mixed this morning, halfway through their trading day. Risk means possible reward, but it also means possible punishment, Phillip. If I'm getting close to retirement, I need some advice. How do I find you on the phone?
Absolutely, Dave. Folks, if you're 5 years out from retirement, it's vitally important you make sure you don't have too much risk in your portfolio, or if you're already retired, call us right now for a financial x-ray where we'll look and see how much risk you have in your current portfolio and assess what you're paying in fees. Call us right now at 382-0037 to schedule your no obligation appointment, and then join us every weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. Sunday mornings on News Talk 730 a.m.
And back here tomorrow morning at the same time on Light FM. Phillip, thank you so much. We'll see you then.
All right, man. Have a great one.
Thank you, my friend. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, again, I want to remind you again, please don't forget, take advantage of our financial x-ray review of your current portfolio. I can't stress enough, we're hitting all-time highs again. We're back up there in the nosebleed section. Make sure you don't have too much risk in your current portfolio. Call us at 863-382-0037. Have a great day. I look forward to speaking to you again tomorrow.